So it's very easy to think of Solvency II as the dominant feature of the development of insurance regulation at the moment, which wouldn't give credit to the activities of the International Association of Insurance Supervisors and indeed the political agenda more generally around the G20, the Financial Stability Board, and indeed the European Systemic Risk Board. Jim, what do you think the broader consequences of the activities of those organisations is in the context of the way regulation is developing internationally?
Well, I think one of the first points to make is that the idea of greater convergence globally in terms of insurance regulation is probably quite attractive for a lot of the larger multinational institutions, because a lot of insurers are currently groaning under the weight of the amount of different jurisdictions they have to report to, everyone asking for slightly different information in a different format. So the concept that this will harmonise in the sort of medium term is probably very attractive. What I would say is that regardless of what's happening from the political point of view, we're already starting to see the impact of that from individual territories and the regulators taking the initiative to enact reform in their own jurisdictions. So you only have to look at China, that's talking about a Solvency II equivalent type of regime in 3 to 5 years. There's a lot of reform going on in the Australian insurance reg market for 2013. And also you could look at what the US is doing, but wider than that, some of the bigger Asian territories like Singapore and Hong Kong also looking at kind of benchmarking exercise, likewise in South Africa. All of those would be very big markets of where the global insurance market is going to be in the future, and all of them incorporating some concept of the idea of systemic risk as much as how they regulate their own markets.
At that point about systemic risk is discussed, and you hear it mentioned very widely in regulatory circles at the moment, back to the political agenda again, and this appetite to consider what institutions might be systemically relevant on the global scale. The IAIS has just concluded its first consultation on that exercise. Again, what do you see being the fallout from that concept, as it were, at the grassroots level?
Well, I think the first point is there's a lot of discussion around the definition of what is systemic and what would be one of these G-SIFIs, as they're called. So you mentioned the consultation, and that was actually strictly around the methodology. So that a lot of the commentary is around making sure that institutions don't get caught in that net, because I think they've realised that that is likely to lead to a greater burden from a regulatory point of view. So the discussion's been a lot around what is it to be systemic and how do I, in a way, avoid that. The consequences, therefore, are quite hard to imagine at the moment, although you could probably predict it would be greater scrutiny from a regulatory point of view, more reporting, more frequent reporting, not necessarily more capital. I think that's a concern. But then if I look at what impact, again, that's having from individual regulators, we've already seen the development of these concepts of recovery and resolution planning, as we're seeing, for example, in the UK, and this whole idea of stressing your business model, thinking about the sort of living will scenario is definitely something that's coming through quite strongly, and I don't think the UK will be the only one. We can anticipate other territories that participate in the IAIS also putting some kind of similar regime in place.
Yeah, so I was very struck in the IAIS consultation about the amount of weight that was put onto, in particular, liquidity transformation, credit transformation, features, if you like, of non-traditional types of business. And what you're really saying is that even though companies perhaps won't have a lot of exposure in that area, the behaviour of regulators might well incorporate some of those concepts into regulation, again, at a grassroots level, so to speak.
Exactly.
So there we have it. The notion of convergence of regulation internationally seems to be pretty seriously embedded, along with the spin-off, if you like, of the development of the concept of systemic importance. So plenty for firms to be thinking about in terms of both of those issues, and in particular the potential carryover of planning around recovery and resolution for the industry as a whole. Thanks for that, Jim. Very interesting.
Pleasure.